Dear friends of Volumetric Trading, greetings from Eduardo Buratini. With this video, we're going to do a volumetric and operational analysis of the S&P 500 and NASDAQ for Tuesday, July 15th, 2025. Let's start right away with the S&P, and let's begin by analyzing what happened during the first session of the week, basically yesterday, Monday, July 14th. So we definitely observed, following a significant gap down opening on Sunday night, a full and almost complete recovery throughout the entire day of the most actively traded levels, even those established from the previous Friday's trading session. So specifically, here is the area around 6,300, 6,310, where we saw some pretty pronounced and repeated rejections, especially on Friday. In fact, after the gap down opening on Sunday night, we also got a signal here, let's say, from the vol analyzer as well, indicating a bearish pressure zone. This significant bearish pressure, in any case, is precisely what on Monday acted as a strong resistance level. And in fact, we experienced a trading session that basically closed right at these crucial levels, but only after clearly showing a price action that was completely and unequivocally bullish, indicating a powerful underlying upward momentum. Break time equals 0.5s/. Now, in my opinion, it's important to consider that all this price action came from the Asian session still on Monday, or rather from the rejection during the Asian session after testing a fairly significant level, which was 6,272, or let's say the technical area around 6,270. Previously, we had a level there coming from the TPO, which was quite significant because it was an area with a virgin POC from several days last week. Now, this test happened outside of RTH because it actually took place during the Asian session on Sunday night. So basically, it's also hard to pinpoint when the real test actually occurred, since the market moved sideways above that level for quite a while. But after that, the market started moving up again, breaking out of what was its value area, which, let's say, was marking off that virgin POC. Then, with a retest that also coincided with yesterday's daily VWAP, Mondays, it started moving up again, touching all the resistance zones ahead, and especially returning to trade around 6,310, 6,312. Where it not only found acceptance, but also where the day's POC was positioned. This is definitely a level we need to consider as resistance. It's basically a physiological resistance, one that our volumetric tools have already flagged as such. And it's also confirmed by, just a second, let me grab the pen. It's also illustrated by what could be a pretty significant end of distribution on the composite profile. So basically, it's the division between this distribution area and this other distribution area, which would then lead the market back towards the area of the highs, the all-time highs, which for now haven't even been tested yet. So basically, in terms of resistance, we're right there. So what's the point? We'll have to see today whether the market wants to come back and rebalance a bit the area just below yesterday's POC, since there was a very strong acceptance zone right at the close of the day, but the area immediately below it still hasn't been perfectly distributed, even though the price kept building support after support throughout the day, with some pretty significant absorption as well. So that's really what we need to watch, and of course we also need to see if the price in today's session will be able to establish acceptance above this technical area around 6,315 to 6,320, because at that point that would mark a return inside this partial distribution zone defined by the composite, which would automatically lead us to test the high volume nodes that are just beyond this area. So it's definitely an S&P that, yet again, has continued to show strong momentum compared to previous sessions. Let me show you this situation from the TPO perspective as well. See once again how, compared to the past few days, it keeps building acceptance above the 6,280 to 6,300 area. And in my opinion, this is a very important signal because ideally, a rejection of this area that is so continuous and persistent can only, for a genuine move, culminate in an acceptance that goes even above what were yesterday's highs. So any possible rejection should be taken with a grain of salt because, as we said earlier, this could also lead to somewhat deeper pullbacks. That said, let's take a look at the situation on the Nasdaq. It's practically almost identical except for one small detail. The Nasdaq has already reached the upper part, a noticeably high part of its distribution even over the long term. In fact, you can see here how the composite profile gives us clear evidence, not only of this as a strongly distributive area, but also a very clear one. Okay. As we can also see, even at yesterday's session lows, it actually rejected the lower part of this entire area and did so with a fairly significant delta effort, which was essentially what accompanied the rejection of this low volume area. So, in other words, it failed to move below the distribution. So, it's also the Nasdaq, just like its sibling, the S&P 500, that built up some solid strength during yesterday's session. The only small difference is that here we've reached an area of resistance, well, a key level. The S&P has reached it too, but here on the Nasdaq we're at a really important resistance zone because this is also a level where buyers were previously absorbed, as indicated by the vol analyzer. This is a level that was created a few sessions ago. More precisely here in the session on July 10th, right at the open, it tried to break out again and make new highs. The move failed, the buyer's effort failed, and so it was identified as an absorption. This area has already acted as resistance several times, but we can see that even here, yesterday's session closed with almost total acceptance at the day's highs and also in correspondence with a rather important value area. Right here at 23,000, let's say almost exactly a nearly round level, 23,030 points. Basically, we can consider it, for all intents and purposes, as 23,000. And right during the settlement phase, the absorption of some big trades failed to bring the price back inside, obviously with a price that, as we can see here as well, kept building. So these are definitely two tools that are telling us exactly the same thing. From the Nasdaq, we can definitely see signs of greater strength, which were evident during yesterday's session, both in terms of the rejection of the lows and in the way it gradually built up as it climbed. You can see here as well that the volume profile distributions from yesterday are much more balanced and also show significantly stronger absorption in the lower parts of the distribution. Moreover, it has reached an important level, so we're really at a crucial point. These are two markets that are about to test a resistance, both driven by a price that has moved in a very supportive way, both in terms of price action and volume. So the outlook is definitely that of two strong American instruments. Let's see during today's session if it will have the strength to immediately break through the resistances and, as for the Nasdaq, move clearly above 23,000, and for the S&P, above the 6,315 to 6,320 area, as we mentioned. And if it doesn't have the strength to do this, let's be ready for a retracement, which I expect to be a bit deeper for the S&P and less so for the Nasdaq, precisely because of its structure with various absorptions that have formed in an upward manner. Obviously, when the market tries to find support to gain momentum and possibly push further, it will definitely encounter stronger barriers on the way down, okay? Obviously, all this analysis should be interpreted as...
It should be understood as being purely for educational purposes and therefore not in any way as a solicitation or invitation to take a position or make a public investment.
Thank you all for your attention, and I wish you good trading.